Hello and welcome to a special Car Dealer Live, where today we are revealing the Car Dealer Top 100. It's a unique list sponsored by Carwow and compiled by finance expert Mike Jones, along with industry analyst Interpath. Now, the league in its second year now is unique as it pitches independents against franchise dealers, ranking them by the most important performance indicator for business, and that is how much money they make. This year's table has data from dealers' 2020 accounts and reveals the dealers that have made the most money during one of the industry's most turbulent times. You can read the entire top 100 list on our website. Click the top 100 tab at the top of the page. But for the purposes of today, we're going to be chatting about some of the highlights and the winners of each category. So the overall most profitable car dealer in the UK and topping the franchise dealer chart as well is, for the second time, Arnold Clark. This year, they had a £354.2 million EBITDA profit, while the most profitable independent and finishing in 11th place overall is Car Giant with a £29 million EBITDA profit. Now, let's talk a little bit more about this. Joining me is James Hind, founder and CEO of Carwow, the Top 100's sponsor this year, and finance expert Mike Jones, who's the former chairman of ASC Global and now an independent automotive consultant working with Interpath, both of whom have compiled the data this year. Hello, both.
Hi. Hello, good to be on. Thanks, James.
Well, it's lovely to see you both. James, let me just turn to you first of all. I mean, it's lovely to be chatting on what is a really interesting day, really, where we reveal the dealers that have well, let's face it, not just made the most money, but have endured one of the most challenging years in the industry in recent years, really, haven't they?
No, I agree. I think these results are from a very unusual, probably never to be repeated year again. But I mean, the growth in them is across the board phenomenal.
Yeah, and I mean, and it's good to see franchise dealers against independents, isn't it? I mean, it really puts dealers all in one pot, which, let's face it, they are really, aren't they?
No, I agree. And particularly in 2020 and into 21, with the new car market being suffocated, franchise dealers have turned their attention to used cars, so more and more competing directly with the independents.
Yeah. We'll talk a little bit more about used cars in a second, because I feel as though it's going to be a topic we're all going to be talking about a little bit in a second. Mike, let me just turn to you now. Now, we've used EBITDA in this list. For the purposes of our viewers, just explain what that is and what you've done to compile the list. And also, I mean, was it a bit of a challenge putting all of this data together?
Yeah, brilliant, thank you. I'll try and keep it slightly light and not turn it into a full accountancy lecture to try and avoid all your view account disappearing into the floor. No, the EBITDA is, well, technically it's the earnings before interest, tax, depreciation and amortization. It's really a measure as to how much cash the business has generated, how much profit it's generated, sort of taking out the financing of the business and therefore how much interest they have to pay and whether they own their assets or not, and therefore the depreciation. So it's sort of used as a measure as to who's making the most money. And we've always been attracted in the industry by the vanity of turnover, with league tables based on turnover, who's the biggest. And this goes some way to try and working out who's the best. Who's making the most money. And I think it's right to put both franchised and independents together. As James said, they're increasingly competing against each other and also competing against some of the online competitors that we see that have launched over the course of the last couple of years. I mean, the time frame is quite interesting as well. We've used accounts up to the end of March 2021. So that really covers the sort of COVID period, the period of lockdowns, the period of selling remotely, moving increasingly online. And before really we moved into what the world we are now of chip shortages, no new cars and absolutely huge increases in used car values. So that'll be interesting to see when we look next year at the compilation of the list and whether it has changed and sort of which group fared better in each of the different scenarios.
Yeah, you're absolutely right. I mean, it really does make for some fascinating reading because, like you say, they cover 3 lockdowns essentially, don't they? But of course, it preempts an amazing summer in terms of new car supply and used car values as well. But we'll talk more about that a little bit later on. Mike, for you, I mean, what were the highlights? What were the things that really stood out for you?
I mean, overall, the industry, franchised and non-franchised, coped phenomenally well through the most challenging business sort of scenarios that I've seen in my working life. To see effectively a 41% increase in the average EBITDA of the people making up this year's list compared to last year's list, given the fact that we've been through the COVID pandemic, is frankly amazing. I mean, the average EBITDA of the people in the list is sort of 16.5 million now, and the clipping levels have increased significantly as well. The turnover, also the profitability results from Arnold Clark sort of standing out, but everybody really had a good COVID period from a profitability point of view. We also saw the returns en masse increase. We're up to, I think it's just short of 3.3% EBITDA on turnover in this period compared to 2.6 the year before. So we're making more money whilst actually effectively selling less. Other highlights this year, sort of segregating the two, we've seen an increase in the number of franchise dealers in the overall top 100. The number of independents in there is effectively halved from 25 down to 12. So that the franchise dealers proportionally have had a good year. With the independent dealers effectively maintaining their level of performance as we've gone through, which is a real credit in itself. But most of the growth has been in the sort of franchise sector.
Do you think, pardon me, do you think one of the reasons for that is a lot of independent dealers, they've really had to embrace online sales, and they've found it a new way of selling cars?
I think everybody's had to embrace online sales, and it's actually, to my mind, looking as a sort of industry commentator, it's helped the industry move forward sort of 5 years in the course of one, as everybody needed to upgrade their online capabilities and their remote customer handling capabilities in order to be able to trade. So everybody got this sort of jolt forwards, and it's helped us. It's helped the industry sort of move into the modern age. The franchise dealers had more costs to cut, more people to put out on furlough, more money not to spend than the independent dealers, who were always leaner and produced a higher return on sort of EBITDA on turnover in the prior year. Now we've still got the EBITDA percentage of turnover for the independents is still 4.3%, which is consistent year on year. What we have seen though is the return for the franchise dealers go up from a 2% as it was before to 3.15%. So they've cut their costs, they've done things more profitably. Because we've had a lack of supply push, the margins have increased, both new and used, for the franchise retailers, and they've not been able to chase as much business as they historically have done.
Yeah, James, you really must have seen that over the past 12 months, where people have had to buy cars online, but they've also had to research a lot more online. It's been an interesting year, especially for you guys, hasn't it?
No, very, very interesting. I think it's just an acceleration of a trend that was already happening. Yeah. More consumers going online, making their decision online without stepping foot in a showroom. Yeah. And we still think the showroom plays an important part, but yeah, we still, during lockdowns, didn't impact that much physically not being able to go into a showroom. We didn't see any big drop in the UK or in Germany with lockdowns for orders. And yeah, this is just the future.
Yeah. Let me just stick with you, James. Now, I mean, last year Arnold Clark topped the table, and they topped the table with 194.3 million EBITDA profit. This year, it's 354.2. I mean, does that surprise you as much as it surprises me?
I mean, they're very, very impressive operators. I think they've embraced digital very well. Their website's fantastic. I mean, I've been to their office a few times. Their office feels like a tech company's office. It's got a real buzz to it, a lot of investment into engineering and product teams for the website. Very good consumer propositions around delivery, and it doesn't surprise me all that much. They're serious operators.
Yeah. Well, before we hear Mike's take on Arnold Clark's EBITDA profit, let's hear what Eddie Hawthorne, Arnold Clark's CEO, had to say. Hello, Eddie.
Hi, James. How are you?
I'm very well, thank you. Really lovely to have you on. Now, firstly, congratulations. You finished in first place with an EBITDA figure of 354 million on a turnover of 3.8 billion last year. With everything that's happened in the past 12 months, I mean, you must be very happy and proud about this.
Very happy, James, and very proud of the staff. I mean, our staff have worked tremendously hard over the last 18 months and just taken everything that was thrown at them. And we've managed to work our way through this and genuinely have a really great performance. Yeah,
and of course, nobody, this time last year, nobody could have predicted we'd have to go through another lockdown as well. So for staff, it really has been a topsy-turvy year, hasn't it, of sort of starting and stopping again.
Yeah, it's been a wee bit of the hokey-cokey, we're in, we're out, and that's inside, outside. I mean, genuinely, when we shut the business in March 2020, it took us about 3 months to get it fully operational and open again once we were able to do that. And we just got everybody back to work that was coming back to work by the end of October. And then the 5th of November, we're locked down again. Got a couple of weeks off at Christmas. And then the first 3 months of 2021, we were all locked down. And so, yeah, it's been a real challenge for the staff, for customers, in fact, for everybody. I don't think anybody's actually been in this situation before, James.
Eddie Hawthorne there. You can watch the entire video on our website and YouTube channel. Let's now talk about Arnold Clark's ranking in a little bit more detail. Mike, do you think Arnold Clark is a bit of an example of potentially how dealers should be operating? I mean, they've got enormous used car business, but they've also got a very healthy used new car franchise model as well. I mean, does anything stick out for you there?
I think everybody else would love to operate the way that Arnold Clark can operate now. I mean, they've got such scale and they are so profitable and have been over a period of time that enables this reinvestment. I mean, it's a very well-run business. We can't get away from that. They do the little things phenomenally well as having the scale to be in normal times, almost the UK's car dealer of last resort, sort of Bank of England style. When people require registrations, they've got the scale in order to be able to buy the cars off the brands, the leasing companies, whoever, and then share them out amongst their locations. So everybody would love to operate in the way that they do. They do it phenomenally well, and it's they get the benefits of that now because they've got such scale across England and Scotland, and the digital proposition as well. They were also one of the franchise groups that have always successfully embraced used cars. They've always had a really strong used car operation to back up the rest of the business. Now we've seen the trend of everybody moving more in that direction, whether it's by creating their own or doing a Sitner did, just going out and buying a couple of the big operators. But they've always got it's not always been purely new car registrations focused. They've got a lot of other things that help drive that profitability level that we've seen in the accounts this year.
Yeah, that is one thing which we've also, I've also spoken to Eddie Hawthorne, CEO of Arnold Clark, for the top 100, and he admits himself that used cars obviously have been troublesome to get hold of, but because they've got that legacy, because they've got that heritage in performing in that marketplace, they've probably had it a little bit easier than some of the other dealers in the list.
Yeah, I mean, they weren't starting from scratch. Yeah. They've been buying cars off their customers for 30, 40 years plus, and they're well known for that. And the car store concept has got that built into it. So no, I mean, they were starting from further forwards than a lot of the other groups, and the sort of pandemic has seen us move in that general direction. We've also seen, as on a wider thing, used cars become more acceptable. You know, if you can go and raise 8 billion on the US stock market with a UK predominantly used car proposition, it's very much hitting a different sort of investor and getting some more sort of a bit of wider acceptance than had previously been the case.
Yeah. James, I mean, you look at somebody like Eddie Hawthorne, and he's been at the helm for a very long time. I mean, this is probably an example of businesses, good businesses are led from the top, aren't they? And a steady hand at the tiller. He knows what he's doing after all, doesn't he?
Yeah, I mean, yeah, long history there, but again, it hasn't stopped them doing whole new things. And as Mike said, expanding further down into England rapidly. Big investments in digital and online marketing, and it's paying dividends. So some would say that a CEO who's been in for that long gets stuck in their ways, but no sign of that whatsoever.
No, I totally agree. All right, let's turn to Car Giant then, Mike. Now, they were the highest ranked independent with 29 million EBITDA profit. I mean, placing them 11th overall. And Car Giant was amongst some big franchise names, wasn't it? Group 1, JCT 600 just above it, and Listers just below. What do you think to this performance?
Yeah, I think the independent performance this year is quite interesting. You've got Car Giant, and then closely followed behind by Motorpoint, sort of a couple of places below in the league table, but really quite close from an overall performance point of view. So they've sort of slipped down from where Trade Centre were last year in the league tables, albeit they had, as we discussed last year, an absolute storming performance and have performed slightly less well as they've gone through the pandemic than they did previously. But no, the results out of Car Giant and lots of the other independents, to be honest, are really creditable. I mean, they didn't have the service business en masse to help drive the profitability, to keep the cash coming in as we went through the lockdowns. They had to pivot very quickly, all of them, into sort of remote transactions with customers, and this shows how well they did, still managing to generate significant turnover and significant profit when the doors were basically shut.
Yeah, I mean, James, Car Giant is one of those examples where it's not just down to the used car market, is it? This is a successful business and has been successful for a long time. And I think one thing that's clear from this list is there are lots of companies there which have been in business for a long time, haven't they? And so they've got the ability to adapt quickly to, let's face it, unprecedented restrictions over the past 12 months.
No, I agree. I think potentially one of the benefits Car Giant have had is obviously London-based showrooms and a big push in London for getting your car ready for the ULEZ stuff. And that is a reason for a lot of Londoners to change their car and likely go for a used car.
Yeah, and I think that's probably something we may see play out in next year's top 100 as well, which could change all again, couldn't it? A different set of factors and circumstances. Mike, let's just talk about some of the reasons why some dealers have performed so well over the past 12 months. We all know the reasons why, but just summarize why you think some dealers, such as Arnold Clark, Sytner, for example, have made enormous profits.
I think there's a multitude of different factors. I mean, clearly the government support scheme to the sector through the furlough scheme and the job retention scheme and the rate support has been a significant benefit. I mean, I know not everybody took it for the entire period. I think Arnold Clark only took it up to November and then started bringing everybody back and didn't furlough anybody afterwards. Lots of the other retail groups have taken it through the entire period, and the government support for operators has really helped and provided a massive increase in performance, whether it's sort of taking people off the payroll so we didn't have to get rid of them, or reducing costs through the grants and the rate support that we've had. So that clearly has helped. It's also helped with regards to customers. And helped, the fact that people have felt cash rich through not being able to spend money as we went through lockdowns, but also still earning, has helped on the demand side as well. We've seen a big reduction in costs across the piece, not just through the furlough and the staff. All the retailers have been looking very closely at their costs and cutting them wherever possible. We've seen I think we were predicting when we were discussing it last year, seen great improvements in used car performance. The car has very much become a necessity as people didn't want to share anything with anybody. Massive drops in public transport, but people still wanting to get around and start working again, and that's helped overall used car profitability. So sort of standing back, I've seen strong new car margins because there hasn't been the same supply push. Very strong used car margins and volumes across the piece. After sales, the profitability has been relatively static year on year, which is slightly surprising given the drop in business, but the highly profitable regular servicing and MOT businesses has continued, and that engine of profitability is carried on there. And sort of the back page costs have seen a reduction as people haven't been spending, and there hasn't been, for the franchise dealers, the same requirement to pursue investment plans that we saw previously as some of the brands were rolling out bigger showroom concepts. So all those things lined up together produces the results that we've seen.
Are there any sort of notable admissions this year, or are there any dealers which not purely in there, but one of the main reasons why they're in the list because they've sold a lot of property? So are there any sort of unusual entries here?
Yeah, I mean, there are some, if we compare the list year on year, clearly we're sort of beholden to when people file their accounts. And I think it's important that we do use the filed accounts rather than any sort of management estimates, because it gives that level of rigor that they have actually been audited and somebody has signed off on them to agree that they're correct. But that does produce some people in this year's list that weren't last year, and vice versa as a result of timing. I mean, we don't see Porsche retail in this year's list, and that's purely and simply as a result of the fact that they haven't filed their accounts. When they file their accounts, they will jump into the league table, absolutely. We've got some people there that we didn't have last year. Group 1 being a prime example, where they're now filing consolidated UK accounts, so we can start including those in there, get them in their right place. The biggest one with regards to exceptional profits that sort of jumps out is Renault Retail Group, where they had a sort of £39 million profit on the sale of a property that was in their books at about 300 grand. So that's clearly delivered an awful lot of their performance that's put them high up in the league table. But we always see this sort of variation year on year. We wait and do it at this time of year to make sure that we can include as many people as possible. And I think it is the overall trend in profitability is absolutely representative across the sector.
I think the last thing I just want to say about the top 100 is, of course, we've been talking about the dealers at the top, but the dealers towards the bottom, it's still not a bad place to be, is it? I mean, dealers still making between £2 and £4 million, which it doesn't sound a huge amount in the great scheme of things, but what with such a turbulent year, and a lot of these dealers, they don't have the scale, do they, of some of the larger dealers? It's still quite a good performance, don't you think, Mike?
Yeah, absolutely. I was just quickly looking at it. I mean, last year, to get in the list, you needed to be at 1.1 million EBITDA. This year, we're at 2.1 million as the clipping level. So that to actually get into the list, you're at 2 million. I mean, there were clearly some people we've seen through some of the published accounts that you've been covering over the course of the last 6 to 12 months. Some people did have a difficult period of time, and we've racked up some significant losses. But the trade as a whole, to have to make an extra £1 million in order to qualify for position 100 really does sort of stand back and say, right, fine, the industry, franchised and non-franchised, had performed phenomenally well over the course of the last 12 months during the lockdowns and the crisis that we went through.
James, I mean, what light do you think this shines on the motor trade at the moment, and also looking ahead to 2022? I mean, what do you think we're going to be seeing? We're going to be seeing another year of huge profits, do you think?
I think we'll definitely see another good year, without a doubt. But I mean, I think it just shows that there are some great businesses out there, and very impressive operators at scale. And as you said, towards the bottom of the list, just looking at the list, there's some great, I mean, single or 2-3 sites, groups, and they're doing very, very well. Often entirely owned by the family. Great businesses.
Yeah. And once again, I think the motor trade is a bit of a bellwether for the economy at large, really, isn't it? Mike, I mean, what's your prediction for the year ahead?
I think the results will go up again next year. I'm sort of commenting on a monthly basis on the overall retailer profitability, franchise retailer profitability, which is up year on year. We've seen numerous profit upgrades from the listed PLCs as they've been closing their accounts, showing how good a year they're having during the course of 2021 compared to what they were originally planning. So no, I think it is I think we're going to see increases as we go through next year. The one thing we might see is a resurgence a little bit in the independent retailers, really reflecting some of this used car profitability and also some of their greater experience at getting hold of cars from non-brand or auction sources. So maybe foreseeing that we're going to see a few more independents come in, maybe getting back to the balance that we had previously. But I think the bottom clipping level is going to go up further as we go as we look at 2021 compared to 2020.
Yeah, well, it's going to be fascinating to see what lies ahead. Both of you, thank you so much for joining us today. It's been really fascinating putting this list together. So thank you for your help.
No, absolute pleasure. And I'd like to thank the team at Interpath for helping me on the number crunching, which is absolutely invaluable to try and make sure that we get the numbers correct and can produce you a valid list.
Yes. No easy task in itself, I can imagine. But thank you, James. Thank you, Mike. Well, that's it for today's Car Dealer. Well, special Car Dealer Live. Once again, huge thanks to Carwow and to Mike Jones and Interpath. The full Car Dealer Top 100 list is available on our website. Just click the Top 100 tab at the top of the page. Thanks for watching, and until next time, bye-bye.